Why you shouldn't flip properties in 2023 and what to do instead to make $1 million in less than 2 years in real estate, even if you're starting from scratch with zero and no experience. Today I'm going to make a case for why you shouldn't flip properties in 2023 and what you should focus on instead for long-term wealth in real estate. The reality is that most people who get into real estate are under the impression that flipping properties is the way to build wealth, when the truth is there are dozens of ways you can get into real estate without having to deal with the high stress of acquiring the property, borrowing money, and hoping that you can sell it for a profit. I've been a real estate investor for close to 40 years, and I buy houses to rehab for my portfolio every day. I don't flip them very often. I want to keep them for the passive income. But if I needed the capital, I'd probably sell them. But house flipping is more challenging than you might think. What you see on HGTV seldom paints the reality behind how rehabs and flipping works. Before I get into it, here are some downsides that you need to be aware of before you get into real estate. Number one, financial risk. It requires a significant amount of upfront capital to get started. You can raise funds from investors, borrow from friends and family, or get hard money loans from lenders, but it does require upfront capital for you to acquire and rehabilitate a property. When I do it, I use my own cash that I have acquired over years as an investor. With borrowing money comes significant risk. If the market were to take a downturn and the property doesn't sell quickly, you could very likely lose a ton of money instead of making a profit. Also, renovation costs usually exceed expectations. And if you're new to real estate and rehabbing, you're going to be in for a big wake-up call when you realize just how much it costs to make the property you bought into a saleable asset that somebody wants to buy. Flipping requires cash, borrowed or your own. Investing cash increases risk. I teach a very low risk creative strategy that requires very little or no capital required to get started. I'm going to give you more on these zero down strategies in a minute. So number two, it's time consuming. The second downside of house flipping is it's extremely time consuming. The process of buying, renovating, and selling a property can be more time consuming than you think. Not only is it take up all this time, it's very demanding and requires careful planning and project management. If you're coming into real estate with very little project management skills, you could be setting yourself up for failure if you don't have a handle on coordinating contractors and overseeing the entire rehab process. You can hire people to do this work, but if you don't know what you're doing, you won't be able to know they are doing a good job. That means you need to do your first projects yourself until you know how to hire and manage your contractors. There's a reason why I teach beginners a very friendly acquisition strategy that not only allows you to acquire properties quickly, but to do it without having to involve contractors or home improvement specialists. Number three, unpredictable markets. Economic factors, interest rates, and legislation all can put you in a position where you're in less control and whether or not you'll succeed with your flip. In some areas, flipping has become extremely saturated, leading to increased competition, while in other areas the tax implications, again out of your control, make it more difficult for you to see a significant return on your investment. I don't know about you, but I like to be in control of the situation as much as possible. If I can prevent external factors from affecting whether or not I'm going to make money on my properties, I'm going to do it. Flipping, due to the fact that it takes time, requires capital, and puts you in a position where you have to rely on other people's competence, this can all make the whole process very unpredictable, which can be stressful. I haven't even gotten into the emotional toll this can take when your project is faced with unprecedented delays or challenges. Your well-being can really take a hit, especially if you're new at flipping and don't know what to expect. So there you have it. Those are the three big downsides to house flipping. Sure, there are some positives to it. I still do it myself, and I think it makes sense when you know what you're doing. But because real estate has become so unpredictable in recent years, I'd rather equip you with a guaranteed method of success that'll ensure you are in the driver's seat. What you should be doing instead is cultivating a skill set of recession-proof real estate investing strategies that leverage zero-down structures so that you can minimize your overhead risk and maximize your earning potential. Discover how, with my personal help, you can make $1 million in 2 years without flipping houses, even for complete newbies. I'm Joe Crump, and I'm going to share with you how to build $1 million real estate portfolio that runs on autopilot. What I teach involves no significant capital allocation in order for you to build long-term wealth in real estate. You won't need capital, but you will need to put in the time and the right amount of effort. You'll need to invest 8 to 10 hours of work per week to get it up and running, and you'll do it by structuring zero-down deals. That means buying houses with no down payments and no credit check. By following my blueprint, many of my students got there within 2 short years. I've been making millionaires for over 25 years, and my track record speaks for itself and supports everything I'm going to tell you today. By the way, most of these folks were not house flippers. They leveraged creative financing strategies to acquire the properties quickly and with minimal risk. A few of my successful students, Daniel Regal from Galatia, Illinois, created his first $1 million in equity in less than 2 years from the time he joined my mentor program. Brad Pickett from Idaho bought 14 houses worth $2 million in 6 months. Shelley from Terre Haute, Indiana, learned the Ferret method, and 1 month later she landed her first deal and made $3,000 just by following the steps faithfully. She then used the system to land more deals, and 2.5 years later, she had a portfolio of 73 income-producing properties worth millions of dollars. Notice how most of them have generated success in the millions of dollars, not thousands. And the best part is they all did it with less than 5 years of work. It doesn't take years and countless flips for you to become a millionaire in real estate. And it doesn't require borrowing money, leveraging other people's expertise, and being subject to volatile forces in the economy for you to get there. So if you're ready, I'll show you how you can invest in real estate without having to go down the traditional road of fixing and flipping. What I'm going to do is walk you through a zero-down investing framework called Subject 2, which is part of my Millionaire Matrix methodology that I teach every student I have in my Zero-Down Accelerator Mentor program. This is just one of the zero-down structure hierarchies that I teach. Let's take a $390,000 property, about average for what's in the country today. I can show you how to structure a zero-down agreement with the seller so that you can essentially acquire a rent-ready property with no money down. Step 1, you purchase it for $390,000, which is the seller's full asking price, and still make money. You're going to buy it subject to the existing loan. That means you're taking over the payments of the seller's existing current mortgage without needing to qualify for their loan. The seller simply deeds you the property. This involves no cash or credit. You put down no money down. In fact, you make money at closing. So I'll give you a little bit more on this later. Step 2, you sell it for $430,000, roughly 10% above market value on a 3-year lease option. The down payment from the new buyer is $43,000, 10% of the sale price. Half of the down payment is in cash, half as a promissory note, or what we call down payment assistance. So $21,500 in cash plus $21,500 as a note with $600 per month of income. Your equity position, including the promissory note, is $430,000 minus $21,500, which equals $408,500, minus the $390,000 existing mortgage, so $18,500 in equity on this property. Step 3, Here's the breakdown. The payment, principal and interest, is approximately $2,500. The tax and insurance, approximately $650. So your total monthly payment on this property, $3,150. The total monthly income from the buyer, $3,400. You make $250 a month positive monthly cash flow. Every year, you're going to make $3,000 annual positive cash flow after expenses. That's $250 times 12 months. You're also going to make $3,840 annual payments towards the principal. This is the buy down on the existing loan. You're also going to make $3,800 in annual IRS depreciation. This is the approximate actual dollar savings you're going to make from your tax savings. You're also going to make $12,000 annual market appreciation if it's a 3%, based on a 3% average, if the buyer doesn't exercise their option. And less than 30% of lease option buyers will actually exercise their option. So if they don't, you win. Plus, you're going to make $7,200 annual down payment assistance. That's that $600 a month from the down payment that you're making. So this 3-year lease option sale nets you $29,000 total annual income from this property, plus equity buildup of $18,500 per deal. If you do one deal like this per month for 24 months, you'll have a net profit of $716,000. That's the $29,000 times 24 months. That's your cash income. Plus you'll have $444,000. That's $18,000 times 24 months of equity buildup. So that's a total profit of over $1.1 million. You just became a millionaire, and now you own 24 properties worth $430,000 each. That's 24 times 430,000, $10 million in properties that you own, a portfolio that will be paid for by your tenants and is likely to double in value over the next 10 years. What you're seeing here is wealth creation that occurs the moment you acquire the asset and continually as you maintain ownership of it. If you were just fixing up this property and flipping it, sure, you'll earn a potential profit on a successful sale, but you'd lose all the equity and capital gain that you could have made if you'd held on to it. Did you know that some of the richest people in real estate all held on to their properties? There's a reason why. When you look at the list of real estate tycoons, you'll find that most of them held on to their assets for decades upon decades. There are more real estate millionaires in the U.S. than any other type of millionaire. The smartest investors buy real estate assets and allow them to appreciate over time. They don't flip them nearly as often. So even if you could just apply a tiny fraction of the techniques and long-term strategies that I teach, you could be a millionaire multiple times over. Don't get sucked into the hype of having to flip properties to generate wealth in real estate. So I've just broken down a very sustainable, minimal risk approach that allows you to buy back your time, replace your 9-to-5 income, and invest without any of your own capital. For a lot of people, myself included, it's a truly life-changing process, and it still blows my mind. The best time for you to get started in real estate investing is today. The best time to get in is when people are too scared to invest. 2023 has proven to be a year of uncertainty for most. But if you're an informed investor, equipped with zero-down investing strategies and recession-proof skills, even if you do this half-heartedly for a couple of years, you will make money. It's not rocket science. Are you willing to put in 8 to 10 hours a week following my instructions? I have some spots available for my mentor program. It might be a good fit for you if, 1, you're an existing flipper tired of dealing with the stress and uncertainty with project delays, rising renovation costs, and you want a stress-free way to acquire properties. Or 2, you're doing a few deals here and there and you want a scalable way to take your real estate business to the next level with zero-down strategies. Or 3, you're 100% brand new in real estate and you've never dabbled or done any deals, maybe you're looking for a beginner-friendly, less risky way to get started so that you can replace your current income, quit your job, and generate long-lasting wealth. Either way, I can help you. My name is Joe Crump, and I've been a real estate investor and mentor for close to 40 years. When I started, I built a $17 million real estate business in 3 years, starting from scratch. In 1991, I lost it all because of wishful thinking and stupid but common mistakes. Unfortunately, I still see investors make these same mistakes every day. My ignorance and hubris trashed my credit, emptied my bank account, and caused me a great deal of humiliation. With no money and no credit, I had to start over from scratch. I needed a new way to invest because banks wouldn't touch me. That's when I developed the Zero Down Investing Framework that I teach and use to this day. If you'd like to learn more about how to invest in real estate without having to flip properties, feel free to book a call. Here's the link. You might also want to take a look at this income earnings disclaimer. This is required by the FTC of all income and opportunity-based programs. All right, I hope that helps. Good luck to you.